We are hoping that this gentleman will let us know an overview about our systems, our fiscal systems are putting the burden on our clients, on us. And we will see what is going to happen, because I've heard that there are news from overseas, and we will be reported about that. And Italy, we always have news. So for us, as Paolo can confirm,
it's no news to have a news.
It's no news to have news, because you have so many regulation on taxes that we're almost allowed not to pay taxes. Am I right? This is my point of view, personal point of view.
You can try.
So I really appreciate if my friends will also take the opportunity to exchange their view on the.
Thank you, Marco. But to tell you the truth, you already started.
Yes, we already. Yeah, I'm really. Yeah, I really have to apologize on all.
We were waiting for you.
NIABA, yeah.
And as you know, we couldn't wait to exchange our thoughts about our tax treaty, tax system. So we already started. And
yes.
Now I want to introduce Ugo D'Alberti, that is my colleague, younger colleague of my firm. And so the three
Thanks
of
for
us
coming,
will entertain you on this very boring issue that is tax. And
okay, I'll get rid of this advice, because everybody is now aware about food. Now we'll get back to tax.
Okay.
Have fun.
Good afternoon. So I'm Joe Andolino. My firm is Andolino & Associates. I'm in Fort Myers, Florida. I'm proud to join Paolo and Ugo. We're going to try and make this a tag team and make tax as fun as we can, okay? So we're going to start, I think, with something that many of the American lawyers and people are going to be interested in. Joe, I'm not sure if you got a copy of the materials. I'm looking at you. So we have some more. Matt needs a copy of the materials. We put them on the chairs. Okay, so I'm going to start with the first page, and we're going to talk about tax changes that are being proposed. Okay? And I'm going to walk around a little bit. I talk with my hands because although I'm not an Italian from Italy, I'm an Italian from New Jersey originally, and I'm going to talk with my hands. Before we talk taxes, I think the most important thing to think about is you have to put the economic situation in context. What are we talking about? The gross deficit of the United States is $19 trillion.
Chump change.
The number is so big that it defies understanding. So what you have to do is compare it to something. The United States GDP, the gross domestic product of the greatest, strongest, most wealthy country on earth, still number one. China has 12. We have 17 trillion a year in gross domestic product. The first time in history that our gross deficit has exceeded our gross domestic product. So when you talk about tax reform and you talk about tax changes, it's very important that the politicians, and after all, they're just politicians, have to keep that in mind. This is the week that the Trump bill is coming out, and we're going to talk about some things that are probably going to be proposed, and we're going to talk about it quickly, top line, but the objective, that's what the arrows are, they're going to try and get the deficit down, that's the down arrow, and the GDP up. What can they do to kickstart the economy? The economy of the United States is growing at about 2% a year. Compared to Italy, it's good. Compared to what Mr. Trump wants, it's about half as fast as he wants. So let's just look at the first page, individual tax rates, okay? Let's look at a married couple, current law, and we're only going to talk federal taxes. So the California people are going to be disappointed. The New York people are going to be disappointed. They pay more. You know, we're not going to have time to talk about that. We go federal taxes. You pay 39.6% on your incremental dollar of taxable income. Okay? And as Paolo said, the question is, what are the deductions to get there? That's very important, because very few people truthfully pay that amount on their incremental rate of tax, because they have many deductions, loopholes, etc., etc. That's where we come in, and you come to us and you ask us how to do it, and we plan, etc. That's current law. Mr. Trump is proposing 3 rates, 12, 25, and 33, okay? And the Trump administration, that's what he proposed when he was running. He stayed with that now that he's president, and the Republican blueprint is basically the same, okay? So individual income tax rates will go down somewhat. That's the proposal. But again, not a lot, okay? We'll see what happens this week. Where it's going to go, I really can't say. And just to think about rates for a second, because it's an interesting conversation, but remember a little history. Back in the early 60s, there was an actor in California named Ronald Reagan. He married a pretty young lady named Nancy Davis, and he called his agent, Lou Wasserman, who was an iconic guy, and he said, I want to make 2 movies this year. I need a little money. He made $1 million a year in 1962. Do you know what the incremental tax rate was in 1962 on $1 million of taxable income? Anybody got an idea? 70. 92%. 92% no earned income credit. That's how Ronald Reagan got involved in politics. That's the true story. 92% no earned income credit. Ronnie made Bedtime for Bonzo, and then he made Newt Rockney all in the same year, and on the second million, he paid $950,000 living in California. He was left with 50. He went to his accountant. His accountant said, don't do that again, and he got involved in politics. The power to tax is the power to destroy. That's what Oliver Wendell Holmes said. That's true, okay? Our rates today are relatively benign compared to those days. If you look at some of the proposals for personal exemptions, they're going up. Itemized deductions, that's a change. They're talking about maintaining charitable contribution and mortgage interest. We'll see where that goes. Obviously, mortgage interest is important to Californians, for sure, and other people with houses. AMT, who knows? The earned income credit really hasn't been talked about. The one that I want to talk about is for the lawyers and accountants and other professionals. Take a look at the tax rate on pass-through entities. 15%, okay? So if you have an LLC and you're doing business as an LLC or a professional corporation, because the corporate rate is also going down, they're talking about that rate being 15%. The question is, will they allow service providers to get that rate, or will they limit it to manufacturers? And we'll see. That would obviously, especially on the corporate side, work to increase the GDP. We might make America great again. It's possible. We would actually have some manufacturing in the States that was a 15% rate. Keep an eye on the names in the news. You're going to see Kevin Brady, who's the chairman of the Ways and Means Committee, being involved. The legislative process for taxes is about to begin. The one, I would call it, controversial issue that was discussed and not proposed, will not be proposed, is something called the border adjustment tax. Because as Paolo and I were talking, the U.S., unlike Italy and most Western European countries, and Canada for that matter, we do not have a VAT, right? We have state sales taxes. The states in the United States, if you look at their budgets, collect a lot of money through sales taxes. That's how they do it. The U.S. has always been reluctant to have a VAT. It's a very simple tax. It's imposed on turnover. It's an administrative burden, but it's a huge revenue collection agent for Europe, okay?
For us, it's 22% now, VAT.
22%. I remember when I got out of law school, it was maybe 15 or 16. And this is the problem. It inches up and inches up and inches up. So if we did adopt the so-called border adjustment tax, Mr. Trump proposed, and it seemed to me to be a good idea, we're going to impose a 20% tax on all imports. What happened when they vetted it, Walmart, all the big box stores that buy everything from China went crazy. They started to lobby, and Gucci Gulch is what we call Washington. Gucci Gulch. The lobbyists came out early and said, don't do that. And what that really means is this tax bill is not going to generate a lot of net revenue. It's going to move things around. It's going to reduce corporate rates, and it's going to count on increased economic activity. The other change, which is important for multinationals, is foreign income, non-United States income, how they tax that. That's a whole course in graduate law school. We're not going to be experts. Essentially, we have a system called Subpart F that taxes indirectly foreign subsidiaries. And believe me, the tech companies, and I know because I had a corporate career, the big tech companies and even the Rust Belt companies take the time to move their technology out of the United States. It's in Singapore, it's in Ireland, it's somewhere, Switzerland, in the canton of Zug. They're not paying 35% tax. They're not paying the corporate rate anywhere. They suck the profit out with the technology, with the use of intellectual property lawyers who know how to draft complex licensing agreements. It's all blessed by the IRS because they get valuation experts, they get commercialistas locally in Italy. They bless the deduction because it's economic. The question is, what's the economic value of the technology? Sometimes to export it, there's a toll charge, but that's essentially what happens. So the message is, from the US side, we have some changes that are coming down. Keep an eye on them. They could affect you, your business, and of course your clients. You know me, my website, Andolino Associates. I'm happy to answer your questions. The one thing I didn't mention, there's a proposal to eliminate the estate tax. Of course, nothing is free. That's an individual issue. If they eliminate the estate tax, the step up in basis rule is gone. So you're going to pay the piper later. So the famous example is George Steinbrenner died the year there was no estate tax. The New York Yankees were worth $2 billion. Everybody said he got away with everything. Not really. He paid $26 million when he bought the business from CBS. His kids' tax basis is $26 billion. When they sell the business, they're going to pay income tax. That's the way the estate tax works. That's another significant change for estate planners that you have to keep an eye on. So with that, I thought I would turn it over. We can have a conversation.
Yeah, just a question on what you said now about the idea to tax the foreign branch of U.S. companies.
Okay.
So to do that, you should change all the bilateral agreement should be changed
Yes.
because as
Pal was
as
talking
far
about
as
the tax treaty.
tax treaties, yes, of course. As far as now, all the tax treaty says that you pay tax on the place where you make the profit.
Right. You pay tax on the business profits of the permanent establishment.
Yes, permanent establishment or branch or whatever.
Correct.
So if an American, a US company has a branch or a permanent establishment in Italy, on the profit and loss in Italy, if there is a profit, they pay tax in Italy.
Yes.
So to change this, you have to change also the bilateral agreement.
Right. So if you look at the package I gave you guys, you will see not the BNA comparison chart of the Trump tax plan. The second package, you will see there's a little vignette by me, a one-page kind of memo. Behind it, it's this page, is a document, this one, Marco, this one, okay? Behind the first page is a document that is the income tax convention between the United States and Italy. It's a thick document and it governs the relationship, the economic relationship and the taxation of the interaction between the two parties. And what Paolo is saying is absolutely correct. This treaty that we have with Italy was signed in the Reagan administration, 1984, right? George Shultz was the Secretary of State. It's like a State Department document. He signed it. They had a protocol, I think, a few years later. Giulio Andreotti was the Prime Minister of Italy at the time, and it tells you how the interaction of taxes and what they're taxed on. The U.S. is a fiscal, arrogant country, okay? That's how we look at things. Our view is, yes, we do need to modify tax treaties when we make changes to account for them, but a tax treaty is a document that's signed by they call it the plenipotentiaries of each country. It's a negotiation by the secretaries of state. It's a very official thing. It also takes into account a negotiation like anything else. What are relations between the U.S. and Italy? Generally good, very good.
Fantastic relations.
So we can do it, but there's other countries we don't have such good relations with.
But anyway, if you change, if you want to do that, then you must let also the other side So if an Italian company has a branch of payment establishment in US,
Yes.
then doesn't pay tax in US, but pay tax in Italy. So if
Yes.
if they find an agreement.
It's mutual.
It must be
It
mutual.
must be mutual, yes.
Absolutely. That's for sure. I don't know if they ever will, but if they,
Right.
must be mutual.
Yeah, and what I'm saying, just to be clear, is,
Yeah.
so the multinational enterprises have a domestic parent company, let's say, and they have affiliates, subsidiaries in each country. Italy, okay? Apple Italy, Amazon Italy, you get on Amazon Italy. So the question that we're talking about is, the Italians can tax, but they tax net profits, that's fine in the treaty because they have either a corporation or a branch. It has what we call a permanent establishment. That's a concept like doing business. So the general lawyers understand it. You're doing business. You have an office, you have inventory, you have a set of books, you're registered with the Italian tax authorities, you pay your tax in Italy. The general rule is you don't pay tax back in the US until you pay a dividend. But we have a provision on the books to explain to you called Subpart F. And operating income, you're right. But if we tried to put cash in the business and generate interest income or other passive income, which is very mobile, the US tax authorities will tax that back in the US. And I don't think Italy cares
No.
if the US taxes.
No,
They're
they don't.
indifferent,
No.
I think. Anyway,
Then there
please.
is also another very important issue that we have to transfer to all the US companies that have business in Italy, to change our financial statements in a US GAAP.
Yes,
And it's another issue
yes, so,
because we treat in a completely different way
Right.
certain accounts.
yes, so allora, we have a form, it's all forms, of 5471. Has anybody ever seen a 5471?
I don't know if now we go to in a very specific, very too deep.
No, but
in that.
it's a great point. So
Yeah.
every year the US sends out a questionnaire to its foreign subsidiaries, and I'm sure that Paolo and Hugo deal with this, and they say, send me your foreign set of accounts, your foreign subsidiary set of accounts. Not only do you send it out in Italian GAAP, or GAAP in the Euro, I want you to translate tradurre into US GAAP. And guess what? US GAAP and Italian GAAP are different. This is
Yeah.
accounting concepts. You could take many examples. Sales, for example, okay? Sales, it seems like an easy thing. Are you on the accrual method? Do you book a sale in the United States, generally, if you have inventory, you book a sale on an accrual method. You put it down on your books, you have a right to receive the income, the inventory goes out the door to the customer, you have a sale. Sometimes that's not always the case, depends on the industry.
Another example is amortization.
Amortization.
If you buy machinery or something, the
Right.
US GAAP, you treat in a way, in an Italian GAAP, you have to amortize debts in 5 years, or
Right.
7 years.
Right, our depreciation
Our
sometimes
depreciation
is
is-
immediate.
Yeah, for you it's immediate.
Is
sometimes.
immediate, yes,
It's
I know.
immediate. So it's
So it's work. It's
Yeah.
work, and it's really, if you think about it, if I can say with all due respect to the people that have to do the work, it's useless work, right? And this is the problem, because you would send the bill for doing the work, which
Yeah.
of course it takes time, and then the Italian company gets the bill and says, what did I need this for? I needed it for my master's in the US, I don't want to pay it, and this is an annual conversation. It's a problem of translation of the two accounting methods between the two countries. But it is an important obligation that we have to live with. But that's a great point.
Yeah. Now, Ugo, I don't know if you want to say something about our tax system,
Yes, I try to.
but just a
Few
few words, because otherwise
No, please.
the dinner will be, no, because our tax system is very complicated. That's why it's not so.
Okay. We have the same general tax principle as I think United States. So as a general,
Sorry, first of all, I want to say that I asked Ugo to come here also for two reasons. One, reason is because he works with me in my firm. Second, because he's married the Italian-American girl.
Very
So he
important.
knows
Yes.
very well.
And my children are Italian-American, so I'm
The
interested.
family, the American family lives in Brooklyn,
Yes.
so he's really, he knows very well these problems.
In
and this,
spite of my English. So now
Ah,
I feel
yeah, very good English.
some
Come on, go ahead.
pressure. So we have the same tax principle. So as a general rule, person, individuals and corporations that are residents of Italy are subject to Italian income tax on their worldwide income. So non-residents are subject to Italian income tax only on their Italian source income. And Italian residents who pay foreign income tax on income earned outside Italy, they are generally entitled to claim in form of a tax credit. So this is a general tax principle. Then we have, I'd like to talk about tax level in Italy. We have a national tax, a regional tax, and a city tax, something like that. So national, for instance, is VAT, IVA, or withholding tax on individuals and companies, or company tax. They are national. Then we have regional tax, which is this tax on the regional productive activities. And we have city tax, which is property tax on mobile properties, and some additional taxes on the individual income, which are frankly increasing these taxes. So, okay, we have some direct and indirect taxes, but I don't want to bother about this. We have some numbers to give. You talk about 39.6 as the maximum average for people. You are lucky. We have 43 plus city tax, which is up to 1%, plus regional tax, which can become up to 3 points, plus social security. So let's say, for instance, a person who has a salary above 75,000 euro is subject to the maximum Italian rate, so it's 43, plus 4 or 5 points of local taxes, plus social security, which is for employees, generally speaking, 30%.
10%.
Yes, but 10% is for the person, which is deducted into his payslip, his payroll. So the company.
10 of the 30 is paid by the individual, 20 of the 30 is paid
Right.
by the company.
Right.
Perfect.
So this is the idea of the gap between the labor cost and the net income of person. So this is because of our debt.
Right.
And also because of our social security system,
And you have socialized medicine.
socialized
Medicine.
Yeah, social security system is.
Social security system is
It's
we
a
call the
great-
safety net.
Yeah, it's a great social security system, but it's very, very, very expensive.
Right.
Very, very, very expensive. So,
Just to talk about it on the US side, to do a little comparison, 39.6 is the federal top rate, and you can refer to the schedule. I think it kicks in at a higher level of income, okay? I think it's now 447,000 for a joint return, about half that for an individual. But I didn't mention, I went over it quickly, state taxes. So New York and California have their own state tax systems, about 10% for the states. If you're a city resident, it's another 2 or 3 for any city residents. Those rates and taxes are deductible for federal, so it's roughly you pay 60% of that. And the Social Security system in the United States, as everybody knows, if you're an employee, you pay about 7.5% on a capped level, up to about this year, about 200,000. So it's not totally different. I think you'd have to go to each level of income, and of course we're talking about, except for the Social Security tax, taxable. So let's talk about a deduction that we may have in the US that I don't think you have. I don't know, but I don't think you have it. Interest on mortgages on principal residence and the second residence is generally deductible, subject to very high caps, okay? In the United States, we take this as a God-given right. And housing is every man's right. Let's talk about Italy. Do you allow this?
We allow this only on the
Interesting.
first house.
On
And
the
there's a
first-
limit, a capital limit.
Yeah,
And a cap
Cap.
limit. So people do have mortgages here.
yes, they have mortgages, it's deductible on your first home and where you live, where you are a resident, and it's a cap.
Okay,
We
so it's
have-
not all that different.
We are covered
Well-
mortgages. Because in Italy, there is a high percentage of owners. The percentage of people who own their house is very high, somehow one of the biggest in Europe. And many people, of course, ask
Borrow.
for, yes,
Yeah.
borrow.
We have a very similar situation, I think, in the United States. It changed a little with the financial crisis that happened in 2008, as you know, was related
Also
to,
in Italy, yeah.
you know, housing and mortgages and a bubble. But still, I don't know the percentage, maybe some of the colleagues do, probably more than 50% of the people own their residence, and many, many residences are owned with the help of mortgage financing. It's a big business in America. And as you know, even to this day, those mortgages get packaged, they get sold to investors because the thought is they're very safe. Before the crisis, people were financing houses with no money down. Now, generally speaking, the banks want 20% down. So leverage is a big part of housing. But of course, with leverage, as I know well, okay, what goes up sometimes goes down. And if you have debts on property that are underwater, the phrase underwater is known to all of us. Because in the last 10 years, a lot of the properties went underwater. So safe is buying it all cash. Not everybody can do that. So I think if you looked at your effective tax rate, your ETR, and you looked at the dollars you pay versus the dollars you make, very few Americans aren't paying 39.6. Most of us are averaging lower than that. Now we have some measures in our law, an alternative minimum tax. The high states like California people and New York people know the AMT because sometimes they get caught up in that because their state tax payments are so high and their interest expenses are so high, they don't pay the minimum, and that kicks in, and that's part of the change.
Excuse me, Joe, I have a question for the Italian. But does that happen in Italy? Where areas like Lazio or like California or where Milano is, and it's called, do they have higher taxes in different regions or provinces also?
Local, yes.
We are talking about some numbers. Imagine that the worst region in Italy asks you to pay 47%.
Is that Lazio?
Lazio, yes,
The
it
most
is one of the
expensive?
worst because it's the regional tax. It's higher in Lazio, and also city tax in Rome.
Like California?
Because of social security here, it costs a lot.
And Milano too, I would think. I would think up in Lombardy the tax rate is high, huh?
Is it?
Probably, I don't know Milan now,
Maybe
but
Europe it's a little bit easier for them.
Yeah.
Forse un punto in meno loro.
1 point less perhaps.
It's a strong economic area,
Yeah.
Lombardy.
But it is not such a big difference. It's few little percentage.
Yeah, well, those of us who are Florida residents, or those who are Nevada residents, or those who live in the state of Washington or Tennessee pay zero state income tax.
Zero.
Zero. Niente.
That's an attraction to those areas.
That's why we move there, basically, okay? Because it's less expensive, all right? Florida gets a lot of its income from its sales tax, its gasoline tax, and other revenue sources, but they have no income tax, and that's a great attraction, as Paolo said. I mean, it's very important to those states. Nevada also, and Nevada, it's no surprise because it's close to California, and they attract people.
Nevada, okay.
Right, Las Vegas.
Las Vegas, yes.
Las Vegas.
Yeah,
Yes.
You say that the average of the tax which the American people pays is much less than 39.6%. So I guess that probably there is a lot of deductible expenses that you do, and I heard about some friends, some attorneys that always they have very flexible regime of the deductible expenses. Is it like this, or because you deduct other, I don't know, other kind of
It's a lot of things. First of all, income levels, okay?
income?
Income levels,
Oh, no.
okay? Your compensation, not a lot of people make $450,000, okay? That's a very high level of income. And that's where the 39.6 starts today, right? It's a lot of money, right? That's number one. Number two, mortgage interest expense. It's allowed up to $200,000, okay? Number three, state income taxes. If you're in California and you're in New York, and these are very, very commercially active places, people there make more money than they make elsewhere, they get to deduct their state taxes, okay? So the effective rate of tax, which is the amount of federal tax paid, and you compare it to your income, okay? It generally is less than 39.6. Corporations, the same thing for different reasons. Very few corporations in America, even though the rate is 35%, very few pay 35%.
So
Big
can we-
multinationals have different
Can
reasons.
we ask the question on the comparison, because in our country, we're deducting the gelato, we just ate.
That was the issue. That was
We
I was
just,
thinking.
we went to the gelato, I deducted.
Gelato.
The gelato shop, because I am in Rome, and I
Ice
spend,
cream, you mean?
Meals and
I
entertainment.
am on travel. In Italy, is the same, that you can deduct for travel to this seminar, to California for a seminar,
Well,
because
let's
for
say
business expense?
It's not like that. It's not like that.
No.
No.
Travel expense,
Travel
Educational
expenses,
expense.
yes, if you can demonstrate that those expenses are for something really
for your business.
for your business, you must demonstrate. But for example, if I travel to Milano for business, like I do usually, and I sleep in Milano, and I need, of course, to go to a hotel, to a restaurant. So the travel I can deduct
Same in the United States.
100%.
Okay.
Hotel, restaurant, no, I can deduct only 2%.
And unless you put it into the invoice that you issue
No.
to your clients, that's fine. Because once you pay taxes on the income that you issue coming from your clients, then you can also deduct the cost. So there is this mutual
But
situation.
even-
But if you do not put this into the invoice of your client, without mentioning exactly that you ask for a refund of expenses, of forfeit expenses, then you risk to be reduced into this cap, which is 2% of your total turnover is deductible as a representative expenses.
We have limitations also.
Exactly.
You
We have
can't buy
limitations.
22 cocktails, you get 50%.
You get half, exactly, and we have other limitations that are, unfortunately, as we all know, the tax code is a social vehicle, right? It's a social vehicle. Charitable deductions are allowed, subject to certain caps. When we talk about travel and entertainment, luxury boxes are capped. All those corporate boxes at the football field, there's caps.
How about here?
Pardon me? I don't know. In Italy? I don't know.
So
For
we compare.
example, Sunday I was speaking with, I don't know if with Paul or with some of you, about the fees of my club,
Right.
about the rowing club. You remember?
Deductible?
So, no,
No.
no. The
In
fee,
the United States, yes.
Well, let's talk about that. Joining the club, the membership is not deductible, right? Not the joining. The expenses, if I take you to dinner and it's a business conversation, it is deductible. It's an art form. And the big accounting firms, if you're a big multinational, they will take your invoices and go over them with a fine-tooth comb and tell you what's deductible and what's not. But it's like anything else. If you have the resources, to get the top flight professionals, and if you know who the top flight professionals are, those are two important things. You have to have the resources, and you have to know who knows what they're doing. If you have those two things, you're not going to pay the same tax as everybody else. And let's face it, it's an advantage in business. A big corporation, take General Electric, okay? It's a big industrial company in the US. Their chairman has said, I pay the US taxes to be a good citizen, not because I have to. It's true. They have 1,000 tax lawyers. 1,000 tax lawyers. They're multinational. Their intellectual property is owned in Ireland, owned in Singapore, very low tax, licensed out. They hire economists, accountants, local professionals. They pay taxes they want to pay. That's the truth. Joe.
So we have 3 tax experts here in our midst, and I have a question. I have seen multiple articles, surveys, stories in the news, including as recently as last night, BBC, NBC, United Nations surveys showing that the most highly taxed countries in the world, Norway, Denmark, Iceland, have the people who, according to these surveys, are the happiest and the most satisfied in the world. From a financial expert's perspective, I'd like to know, assuming that's true, assuming the surveys are true, why is it that the most highly taxed places on the planet have the happiest citizenry?
Because we don't know
Can I
any better.
answer?
I don't know any better.
I'd like to get in that.
I can answer under
No, I'm asking the experts.
the Italian point of view. Italian point of view. If I pay nearly 60% of my turnover in tax, 60% of my profit in tax, I assume that I have good roads, good healthcare system, good police. I have to feel safe. When I'm old, when I will retire, I have a
Let's talk about justice.
justice. Okay, a justice that works in a perfect way, not wait for ages to have an answer. So I assume all that my kids have the best school as possible. So here in Italy, I have to send my kids to the American Overseas School of Rome, private school, since when they are 3 years old. Why? Because Italian schools now are terrible. I have to pay my insurance on personal insurance for health care, because the hospital, if you go to a hospital here, you can enter, and you don't know if you go out with your legs.
You enter in 2 years, not now. You book now to enter in 2 years.
So if I have to pay everything for my needs, why I have to pay so much tax?
Yeah.
So there, they pay like I do, 60% more or less, I think, 65. But they have everything. They don't have to think about anything else in their life.
May I?
They know that everything is perfect.
May I
I will be
adjourn?
happy to live in that system.
Are you
I'll be
saying
very
they have
happy.
a better
I'm
government?
ready.
They have a better government?
Less
They have
corruption.
better
That's
government,
correct.
they have less debt, historical debt, because they didn't have to make any promises in a political point of view like we did in the past.
Let me also say,
And everybody pays taxes there.
yes, let me also say, let's just talk about the populations of Norway, which is different than Sweden, which is different than Denmark. I know this. How many Norwegians do you think there are? 6 million. How many Danes do you think there are? 6 million. How many Swedish do you think there are? About 12 million. Look it up. Okay? Let's talk about something else. Most of the people in Norway, Sweden, and Denmark are Norwegian, Swedish, and Denmark. They have some Immigration, not a lot. And the immigrants have caused a lot of problems, but not a lot. And the other thing that Norway has that the other two don't have is oil. The wealthiest country in the world per capita is Norway. 5 million people, a lot of North Sea oil. They're beautiful people. They're happy people. They ride around on bicycles all over Copenhagen. It's a very complex question, but a lot of it is low debt, the same people, and a lot of assets. Statoil, which is the Norwegian oil company, is one of the wealthiest companies in the world. And every Norwegian has a piece of it. It's just a unique place.
Anyway, George, we have also to say that it's also not true that they are all so happy. Because in those countries there is the highest percentage
Suicide.
of suicide.
That's interesting.
So,
And alcohol.
that is something that we don't have here. We have to fight so much to survive here that we don't have the time to think about suicide.
You cannot afford it.
Yes.
So I have a question about, you said that, I think I heard you say, most of the corporations don't pay taxes anyway in the US. So what will lowering the corporate tax rate do?
I didn't say they don't pay anything. I
Well, they
said
pay very little,
They
right?
don't, if you're talking domestic company, let's talk purely domestic company, okay? Middle-sized companies that are corporations, right? And I'm talking about a C corporation, right? Let's take an example. Ross stores, right? They buy stuff from China using US dollars. They only have stores in America. They don't have a lot of research and development. Their effective tax rate is probably close to 35. Let's compare that to a multinational in kind of the same business, Walmart, okay? Multinational. They have some technology, okay? They take that technology, they get it offshore legally. You can do it. You pay a charge out of the country, you get a lot of experts, you do it. They reduce their effective tax, and it's industry by industry by industry. Aerospace. Our government doesn't let aerospace companies move military properties, manufacturing outside the U.S. We're stupid. We're not that stupid, okay? They're stuck. Boeing, their commercial business is all over the world. Their domestic business is here. They pay some tax. But they pay a very low rate on their global assets because they have intellectual property lawyers, and I know we have them here, who write great license agreements. They move the technology to low-tax countries, and that's what you have in Luxembourg, Singapore, etc. So the question is, if they're not paying a lot of tax anyway, what does lowering the rate do? That's a great question. Believe it or not, if you look at the U.S. annual budget, the tax that we collect the least of is the estate tax, because there aren't many estates over 11 million. You need 11 million, two people, 5.5 for one. And the next lowest one is the corporate tax, because the corporations have ways to not pay it. Most of the taxes, 80%, come from individuals and Social Security taxes. It's really politics. It's really politics. Ronald Reagan said, corporations don't pay taxes, people pay taxes. It's essentially true, okay? And, you know, we have people that are anti-corporate that want to take down statues, that throw paint at corporate headquarters. It's a lot of politics. It really is. And it depends industry by industry. The U.S. oil industry, and I was in that business for a long time, pays a high effective tax rate because people hate it. Right? Exxon, those companies that are multinationals in oil, every country taxes the oil companies very high. So it really depends. It's very, very, if you will, you have to get down to a very cellular level. It's really hard to stereotype. You have to look at the facts and the companies.
So am I understanding your answer to be basically nothing?
It'll happen.
Know, right?
It'll happen for the smaller companies that grow. There are some entities that are still corporate Cs, most are S and LLCs, so they avoid the double layer of tax, right?
Right.
That'll help them. That'll
It'll
help.
help them, but the idea is to then increase their ability to hire people, which is gonna increase our GDP, right? That's the
Well,
whole
or as a
idea.
corporate guy, and I may not have the same philosophy, maybe my idea is to take the money and give it to the capitalist shareholders because it's their money, right?
Which does.
Why do
not
I
create economy.
really want to help people? I want to tell people I want to help people, but I want to make my shareholders wealthier. It's capitalism. They invested the capital, they have to be rewarded. It's a political, economic issue, and you have to, you can't piss all the people off. As Obama said, and he wasn't all wrong, if it wasn't for me, okay, he went to Wall Street and he said this, and he's right, okay? If it wasn't for me, and if I wasn't here, believe me, the people would have come down here with pitchforks and killed you. He's maybe got a point. So a lot of this is politics and how people perceive it, not necessarily reality. And as lawyers and professionals, we have to see the facts for what they are, which is different than the perception. I don't think lowering the corporate tax rate 3 points is going to do much. No.
Thank you.
I wanted to go back to the deductible expenses, just to clarify 2 points. One is that in Italy there are other expenses which you cannot deduct completely, such as telephones. The company cannot deduct, or an individual with his own VAT business cannot deduct entirely phone expenses, mobile or fixed phone.
Landline.
Yeah. But only a certain percentage. And also cars. Any cost for car, for maintenance, to buy, whatever. So there are different costs which, if you think also to a commercial company which has some people who has to travel to try to meet clients, whatever, this could be a heavy cost because you cannot deduct. So you pay taxes, which in Italy is 24% this year, the company tax plus the regional tax, which is about 4 and 5%. So we have this 30%, which has to be paid also to all of these not deductible expenses.
Yeah, and that's for companies, right? That's for businesses.
Yes.
See, our businesses are very different. We have a section, Internal Revenue Code, Section 162 for the tax people, and it's very broad. If something is used in a trade or business, lawyers, accountants, business people, whether it's a phone, a landline, a mobile, it's totally deductible. Now, if you want to get into the calls, the personal calls versus, the real question is the IRS examination, which is a whole other topic, okay? We've had Republican administrations that have not funded the IRS, right? The way they do it is not give the taxing authority, we call them Internal Revenue Service, you call them Guardia di Finanza, there's not enough agents. They can't do all the audits they need to do.
No.
If you're a large case taxpayer, which is defined as over 100 million, they live in your building, you got to deal with them every day. That's your job. If you're an individual, even a highly, highly compensated individual, the rate of audits, I think you can ask people if they would be candid. Very few people have ever experienced a tax audit. Trump, of course, is in the middle of an audit, okay? He's a very unusual guy, very high profile guy. He's going to be audited, and we'll see what happens. So we call it the audit lottery. It's pretty hard to be audited by the Internal Revenue Service. More state tax auditors make audits than the IRS. They simply don't have the resources. But other people do get audited. It's the luck or hard luck. Anybody been audited lately by the IRS?
Lately?
I was audited once.
Where are you?
25 years ago.
Yeah, 25 years ago it was different. It was different. The IRS has not been funded properly. Talk to any IRS agent, and they have great people. Okay, there's decent people that work there as well, competent people. They can't do the work. They don't have the time or the people or the resources. So.
Joe, I have a question. I know we only have about 10 minutes left, but we can compare. In the United States, when people sell property or sell an asset and they make a gain,
Right.
we have a different tax rate
Right.
associated with that gain than we do on normal income tax in that year.
Right, so capital gains, Paul is referring to
Do we have that in Italy?
preferential rate of 20%.
We have, if you own the property for more than 5 years,
We have 1 year.
Correct, holding period of 1 year.
no, then you are taxed.
So 5 years, then what happens?
No,
After 5 years,
after 5 years, you're not taxed.
Ever.
you can make $2 million on the property, buy for 1 million,
100 millions.
and no tax.
No tax.
Madonna me! Facciamo questo!
But it's a long-term view though. 5-year
Because-
holding period is a long holding period.
Because 5 years demonstrate that is non-speculative
Investment.
And the same thing with the stock market, la stessa cosa, if you buy IBM stock or Google stock in the United States 1 year, you hold 366 days, different tax than 364.
No,
Is the
stock-
5-year rule the
No,
same?
stock no.
So only real estate.
Only real estate.
What about stock?
Stock you pay normally.
Yeah,
If
we
you
have,
if you have capital gain, you pay
26%.
all right, section 1221, the Internal Revenue Code, property.
26%.
All property. So you have a few exclusions, inventories and exclusion. Other than that, intellectual property, shares, bonds, real estate, any property held for more than 1 year gets a preferential rate of 20% plus state tax if any. It's a good deal.
Yeah.
It's a very good deal. Many people advocate for a longer holding period to stop speculation, but we'll see what happens. It's a very different system. Yes, ma'am?
Is it true in Italy, if you have a parent with a couple of subs, for your filings, it's just a consolidated filing? Or do all three?
How do you get consolidazione nell'Italia per il gruppo di popolazione? Do you need parenti and can you consolidate?
You can consolidate by
So when you file his income tax for a
Right.
company,
Yeah.
is it, in Canada, for example, if I have a parent and 2 subsidiaries, each company, parent and 2 subs, I have to do 3 filings.
You can ask for consolidation.
So it exists in
Yeah,
Italy,
yeah.
It's
consolidated.
an option.
Yeah, it's an option. You can ask for
And do they
consolidation.
give it if you make money in the parent and you make money in this sub 1 and sub 2, you lose money, you have a big loss.
Yeah, you
So
can-
when you add it all together, it's 0.
You can
You get
consolidate.
it, you
Yes.
get consolidation and they cannot deny you the option.
Right.
No.
Consolidated tax return, do you need to have a corporate parent or can they be brother, sister?
No, they can be brother, sister, or you can have.
All your companies in Italy,
Yeah.
okay,
Yeah.
don't even need a common parent.
You must have a link between the
All the way to the parent in the US or wherever, Canada.
Oh, you can. No, in Canada, wait. In Canada, it's different. If you have a mother company in Canada, it's different. The group it's not Italian group. No.
Yes.
No, it's not Italian group.
I'm not sure.
See,
You
I
must,
think,
you must have a holding company in Italy
see,
that is owned by the mother company in the US or in Canada,
Right.
wherever, and then the Italian holding company owns 1, 2, 3, 4,
right,
how many companies you want in Italy, and then you can consolidate all the Italian.
same in America. So brother, sister, no, parent, sub, yes.
Yeah.
So what happens in a corporate merger where you have brother, sister all over? You go to your commercialista and say, we must consolidate the entities and put them in one group because they're probably leveraged, some lose, some win. You want to pay net, right? You want to pay on the net. Great question.
I want to say just one thing about property tax.
Please. Immobiliare or
Yes.
capital? Okay, immobiliare,
Immobiliare.
real estate.
Real
Yes,
estate.
It's real estate, okay.
Because in Italy, for your first and only house, where you put your family, your living,
Address where you have your own
your address,
where you
your
live.
place of interest, you do not pay a property tax.
You pay no property tax on your primary residence. There's no real estate tax in Italy.
Unless it is a mansion, you know?
A villa. What's the definition of a villa?
No, it's a really a
How many
mansion.
square feet?
No, mention, not villa.
How many square?
300, for instance.
300 square meters, which is 300 times
So
10.
that's more.
3,000 square feet. We have a lot of 3,000 square foot Mac mansions in Florida. So,
They're
okay.
not mentioned, or they are.
It's big for you, but you know, we like real estate. You know, it depends.
Depends.
So if it's less than that, if it's less than
Don't pay.
90 square meters, 1,500 square feet,
Nothing.
niente property tax.
No.
That's a big thing. That's a very interesting thing. Please.
A basic question, could you describe a little bit about the mechanism for collecting taxes in Italy? Do people have to file a tax return every year with the government?
Tax return every year, and then.
So it depends if you are an employee or not. If you are an employee without any other kind of revenue, of income, it is your company that gives you the job that files this information to the tax authorities, so that you are not asked to file any other kind of, unless you want to deduct some expenses, such as, for instance, medical expenses or interest on your mortgage or whatever. All the other are asked to file. So company or and individual which make their business as independent contractor, they are asked to file at least 3 income tax return. This income tax return or VAT tax return and regional tax return. So these 3 different files information plus many others. And I keep the opportunity to say the timing of paying taxes. We are asked to pay a balance of last year and an account
Advance.
of the
Quarterly?
current year.
Quarterly?
No. We are to pay twice a year.
Okay.
In June, we pay the balance of last year and the first account of the current year. And within November 30, we pay the second account.
Is this for self-employed or employees?
For self-employed and also for all the companies.
Okay, for all the companies. And so what about employees? You have wage withholding.
On a monthly basis, the company that gives you the job,
Your employer.
your employer is asked to pay to you the net and the tax and social security, all the rest.
Same in the US.
We have a similar.
I am really sorry to rush into this fantastic debate because I think I would have spent hours listening to these professors. And
Next time we can organize some next meeting in the US.
oh yeah.
Absolutely.
Paul will be happy
We
to
will
host
be very
us.
happy to reach you wherever in the US.
But unfortunately, time is running really damn fast, and I want to urge you lecturers, and we thank you very much for your really appreciate it.